What opportunities are currently present in the Bitcoin market? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Now after you complete the KYC process and deposit $100, you will immediately receive a Bitcoin contract position worth $1,000. This is a very generous offer. To take advantage of this, simply click the link below. Complete the KYC process, deposit $100, and choose whether you want a long or short position. The $1,000 worth of contract position will be open for you. Now, let's get back to the Bitcoin market. The most important thing we are concerned about is the current box pattern. Is it a continuation of an upward trend? Or a distribution pattern indicating a potential top? If this box pattern represents an upward continuation, we can expect the price to continue rising after the continuation pattern. However, if it indicates a potential to and distribution pattern, we might see an upward movement followed by a downward trend after distribution. So how can we draw conclusions from the current price action? We need to determine which scenario is more likely. Let's talk about the conclusion first. In my opinion, based on the analysis, it is more probable and has a higher chance that we are witnessing a distribution pattern, indicating a potential top. Now, let's dive deeper into the reasoning behind this conclusion. If the box pattern represents an upward trend continuation, there are two possibilities that the crypto whales might be considering. The first possibility is to shake off weak market participants, both in spot and futures markets. Taking this drop as an example, if you open contracts at a high price and chase the market, it is highly likely that you would get a margin closeout or stopped out. That's likely the case. In such cases, you would not be able to benefit from the upward movement. Then, you would have no profits in your hands. So you won't close your position. So the whales won't have a problem driving up the price. The same applies to spot trading as well. If there weren't a significant whipsaw, many people would have held their spots to higher prices. In such cases, large unrealized holdings being sold can pose challenges for the whales trying to drive up the price. Now, let's analyze the current market situation. In my opinion, the first scenario is not applicable, no matter what. For example, if we look at futures trading, your stop-loss level would have been triggered at the previous low. In the case of spot trading, since it has remained at these levels for an extended period and experienced a significant retracement, I believe spot traders would have left. Therefore, the issue preventing an upward movement is not due to an excessive number of market participants. In the previous scenario, the reason for the lack of an upward movement was attributed to the need for a shakeout, due to a high number of market participants. However, in the current situation, the shakeout has already taken place, but the market still hasn't seen an upward movement. So, let's consider the second possibility. Is it possible that whales still want to accumulate more chips at this level? Are they trying to absorb more chips within this white region, anticipating a larger upward movement and a significant bullish trend? Alright. From a cyclical perspective, this hypothesis is not very plausible. It doesn't align well with the current cycle. Why do I say that? Well, if we analyze the situation, I don't think the problem is a shortage of chips. In the previous scenario, we questioned why there was a need for oscillation and chip absorption at a certain level, suggesting a shortage of chips. The whales needed to accumulate chips at this level before they could rally the market. However, at the current level, I believe there is no need for further chip absorption. They have had enough chips. Why did I say so? If there were a need for chip absorption at this level, followed by an upward movement, the magnitude of the upward movement would not be smaller than the previous one. This is because the whales already absorbed chips during the previous phase, leading to the subsequent price increase. Considering that we are currently experiencing an extended period of consolidation, the magnitude of the upcoming upward movement should be equally substantial. Is it possible? Let's consider the following. Suppose that the price was to continue rising after the current consolidation phase. We are approaching the start of the third quarter. If the third quarter begins and it continues to rise, it will take time for the upward movement. Additionally, forming a distribution phase at the top also requires time, and this distribution phase would be larger than the previous ones. Both the upward movement and the subsequent distribution phase take time. The same applies to the downward movement. Even a consolidation phase at the bottom, before another upward push, would take time too. Considering all these time factors, it becomes difficult for the market to catch up and align with the next halving event in April next year. followed by another bullish wave. It can't catch up. It's challenging to fit within such a long-term bull-bear cycle. Therefore, based on the two possibilities mentioned earlier, we can mostly rule out the scenario of continuing as an upward continuation. Thus, we are left with one remaining possibility, which I consider the most likely. It's currently forming a distribution phase at the top. With this inference using the broader time frame of the market cycle in mind, we can focus on trading in line with the overall trend. If it's a distribution phase, it's crucial to capture short-term bearish movements and identify suitable entry points. Personally, I would not go long. There's one key line that can invalidate my bearish perspective. Once it gets broken here, the bearish outlook becomes highly likely to be incorrect. However, until that line is breached, I will maintain my current view. In the past, we have observed similar distribution phases at previous market tops, which had corresponding trend lines, such as the one here. It has a corresponding trend line, right? The price has touched the trend line twice without breaking through, indicating the formation of a distribution zone, which typically precedes a significant downward movement. Until the price breaks above this trend line, the bearish sentiment persists. For example, during the previous market top in 2019, we witnessed a similar pattern. The price touched the resistance area without breaking through, until it eventually experienced a sharp decline. I have been waiting for this candlestick. When it appears, it will be an opportune time to increase position size and actively participate in trend trading. Also, we must involve ourselves in trading when this candlestick and trend appears. Currently, if we zoom in on the chart, we can see that the price is consolidating within a smaller triangle pattern with diminishing amplitude. So what will the price movement be like next? What are we waiting for? This is it. When will it happen? What's the best timing to enter the market? The answer to our question will likely reveal itself either at the end of this month or at the beginning of next month. That's when we can expect significant developments. On a smaller time scale, we have indeed witnessed some upward movement. However, this upward movement is feeble and lacks strong volume support. When comparing the strength of the bulls and bears, the former is not in a favorable position. Including the current uptrend, it is actually showing signs of exhaustion. The price movement forms an arc, instead of a steeper and more aggressive slope. It is not in that case. It is more of a curved pattern. It hasn't started to rise yet, but it is already showing signs of exhaustion. We can see a lack of strength in the bullish trend. There is also a potential head and shoulders pattern, but we need to wait for a breakout to assess its effectiveness. Furthermore, I believe the current bounce is a genuine one. It's a guaranteed scenario. A retracement of 38.2%. After a decline, it leads to a weak rebound, which often serves as the starting point for a significant drop. Let's assess the market conditions. As for my short position, I haven't closed it yet. I'm still in the game. I closed half of the position, but I'm still holding the remaining portion. The current market conditions don't provide sufficient reasons for a long position, unless we see a breakout, which hasn't happened yet. So, there's no reason to go long. Do we have reasons not to short the market? Yes, we do. Currently, there are two options to consider. It's either go short or not go short. The specific entry point is another story. However, in terms of overall direction, I am currently taking a short position. However, there is a rationale for not going short, which is to protect the capital. Additionally, it is currently above an important support level. If we were to go short here, the risk-reward ratio wouldn't be favorable. If we choose not to go short, it doesn't mean there isn't any reason behind it. I am still patiently waiting for the best entry opportunity and trading signal. When will the next trend start? I believe the upcoming market development is what I'm most excited about. I hope to seize this opportunity. The previous uptrend has come to an end. Now, we're waiting for the arrival of the new market movement. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.